Hello everyone, thanks for joining us this Saturday morning and welcome to this educational presentation of 3 powerful techniques to help maximize your trading. Now these are 3 things that I use in my own personal trading on a daily basis, and let's jump right into it to show you exactly what it is, because I have a lot of slides and a lot of information to share with you and to teach you today. So let's jump right into it. Technique number 1 is strategy number 4. Okay, that's probably one of our most consistent methods, and let me share with you some of the highlights of this particular method. Specifically designed for traders looking to catch momentum. So we're not looking for a pullback or a sell-off within an uptrend or a spike in price within a downtrend. We're actually looking to catch momentum that has already been established. Now it does this by recognizing and identifying a pattern. So it's a pattern recognition strategy. And it only uses one indicator. That's how simple it is. It uses the 50-period simple moving average. Now, in today's presentation, I'm going to actually share with you 2 of the rules that make up strategy number 4. Now, let's look at this older example here in QCOM. And as you can see, the stock, just from someone viewing it on site, would say, well, there's nothing happening at all. In fact, we're in a range market. I've always been taught never to get involved in sideways markets because you'll get whipsawed, and so best to stay away from this. Well, strategy number 4 in this sideways market actually generated not 1, but 2 buy signals using its proprietary pattern recognition method, and they were signaled just days before a 25-point gain in the market. Now, remember, we pride ourselves on having consistent methods. Now, consistent does not mean that every trade is a winner. I know a lot of people think that consistency means, well, that means I'm going to have the majority of my trades winning all the time and hitting these home runs. Consistency actually means that there will be losses from time to time. You just want to have a method that's able to recoup those. For example, as we look at this chart here, where we say to ourselves, well, not much happening here. It actually looks like it's kind of rolling over, and for all intents and purposes, the strategy generated a sell signal. So you say to yourself, wow, this must be a pretty good signal. Steve says that this method is very consistent. So you sell, and then this happens, okay? So what we need is a tool that will help us in filtering out a lot of these setups that aren't really going to generate some nice gains. In fact, they may do the opposite. That's where technique number 2 comes in. And now our third technique is applying it. And that's how we've made it so simple for you on the new PTS Primo charting platform. This is the educational platform that actually teaches you how to trade. So when you put together strategy 4, along with a filter, along with the PTS Primo charting platform, you really have 3 special techniques that are designed to help maximize your trading. And that's what we're going to be talking about today. So this is going to be a great educational presentation. Welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. I started Specialist Trading with one goal in mind, and that was simply to educate traders. That's what's really missing from most successful traders, in that they don't have enough education. So what happens when you feel you're not educated enough, or you don't have enough experience or insight in how to trade? Well, the first thing you do is you say, well, I'll just rely on what someone else tells me what to do, right? They must know what they're doing. And that is a recipe for a disaster. In fact, the entire industry is based on that, on you going to a chat room or listening to some guy on TV or even someone in a webinar tell you what to do. And then you follow exactly what they do. And sure, you may have a win every once in a while, but most of the time you lose everything and you give everything back. This is why 85% of all traders fail. What's missing is education that allows the individual trader to make their own individual decisions. Because once you start to make your own decisions, that's when you start to become consistent. Not when you rely on someone else, but when you rely on your own education and your own insight. So this is what we provide you with. This is the missing link that Specialist Trading and Pro Trader Strategies focuses on. We don't focus on telling you what to buy or what to sell. We don't focus on telling you that we have some $1,000,000 system that never fails. We don't believe in any of those things. But what we believe is in supplying all of our students around the world in over 115 countries and in virtually every state in the United States sound fundamental education, because that is what will sustain you, okay? So you're going to see just how much attention to detail we give in educating you today. But before we begin, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results in using these 3 techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view the disclaimer, once again, I know we have a good class here today, but if you haven't done so already, please feel free to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. I post different things on a daily basis, anywhere from signals our strategies have generated to little bits of financial wisdom. In fact, the other day, I posted that a number of our methods were generating sell signals, and I believe the market the very next day went up a couple of 100 points. This is not to say that we lost any money using our proprietary techniques. You actually would have never even triggered into the sale. So there was nothing lost there because you never would have gone short. So we teach a lot of great stuff, lots of free education. So feel free to follow us on Twitter. Okay, so once again, we are different from other webinars you may have attended in that our only goal is simply to teach you. Remember, if you've come to this webinar thinking that I'm going to tell you what the perfect market is, or I have a perfect system for you, or I'm going to tell you the perfect time frame, you come to the wrong place, because our philosophy is entirely counter to that way of thinking. We don't want to tell you exactly how to trade. What we want to do is teach you things that have stood the test of time so that ultimately you can decide for yourself how you want to apply them. And we're with you there every step of the way so you feel comfortable in learning all the different variables, okay? This is the way I was taught and what I firmly believe has sustained me going on 42 years now, and hopefully it will do the same for you. Now, since we have a really good Saturday morning class here today, I want you to ask me as many questions as possible, but as I stated in the beginning, I have a ton of slides to share with you, about 150 today. So if we stop at every slide to ask a question, we'll be here far too long. I don't want to take up your entire weekend with this presentation. So please wait till the end of today's class to ask questions. I promise I'll get to each and every one of them. If you happen to have the most common question, don't worry, I'll answer that right now. And that is this being recorded? Yes, it is. So if you have to leave early, or if you can't see the screen or hear my voice, don't worry, we will send you a link to this recording. So once again, if you happen to join us late, we have a good class here today. Lots of information to share with you. So if you have a question, please wait till the end of class to ask. All right, with that said, let us begin today's presentation. And we're going to start right off the bat by going over rules 1 and 2 of strategy number 4. I'm giving you basically half of the rules of the method right here. Rule number 1, if you get a buy signal, it can only be entered above the 50-period simple moving average. Okay, remember, it's based off a pattern, but you must see that the final bar of that pattern is gives you an entry point either on or above the 50-period moving average. So let's look at this generic chart here. All right, someone would look at this and say, well, you know, not much happening here. You're kind of in a range, kind of get a whipsaw market. I would stay away from this market because there's no trend. Well, that's not true, because if you apply the 50-period moving average, you'll ask yourself, where is price in relation to that moving average? And price is above. So that means the overall trend is up. Now, this is not something I'm telling you. This is something the market is telling you. Okay, so the market is telling you, the very source of what you're trading is telling you the overall trend is up. So would you want to sell if the overall trend is up? No, definitely not. You'd want to go with it. So right off the bat, you'll know whether you should have a buyer's bias or a seller's bias. Now, the same principle works if you're selling. If your strategy generates a sell signal based off the pattern, it can only be entered below the 50-period simple moving average, or maybe right on, or just a tick below, okay? So as we look here, once again, someone would say, well, Steve, there's no information here. I don't have the earnings reports, I have the estimate. I don't know what the fundamental news is about, what's going on economically. Plus, I don't know much about this company, so I have no idea what the trend is. Well, that's not true, because those are all outside sources. What is the market? What is the chart telling you? If you apply the 50-period moving average, you're not going to waste your time looking at this up and down market. You're going to say the overall trend is down. The market is telling me that most likely it's going lower. So if the overall trend is down, do I want to swim upstream? Do I want to go against it? No, you want to go with it. So you should only have a seller's bias. Okay, this is how you add consistency and help maximize your trading, by firstly being in sync with the overall trend. Okay, so that's rule number 1. We go into rule number 2. Once we get a setup, we only want to buy those signal bars that close in the top 25% of their range. Okay, so a lot of students always have trouble with this. They go, what does that mean, the top 25% of the range? Well, remember, strategy number 4 can be applied to any market, any time frame, and any direction. It makes absolutely no difference what the time frame is if you're looking at tick bars or monthly bars. For example, if we look at this generic bar here, if this is the final bar of a strategy number 4 setup, we want to divide it by 4 separate but equal parts, and if it closes in the top 25% and it's above the 50, well, that's an indication to buy. All right, once again, looking at this generic chart here, we're above the 50, and we have a bar that closes in the top, another one. Now, as you can see here, this went up for about 5 or 6 bars. Now, someone would say, well, that's not very good. It didn't go up a lot, but for all you know, these are monthly bars. And it doesn't matter. The point is, it goes up. That's your high level of consistency there. And we have another one here, and how do you think this one performed? Pretty well, right? So you see these clues the market gives you. If it closes in the top 25% and it's above the 50. Now the same principle works on the downside. You're only going to sell if the signal bar closes in the bottom 25. So regardless if this is a tick bar or a monthly bar or a weekly or a range bar, it makes no difference. You divide by 4, and if you close in that bottom 25% and you are below the 50 period, that is an indication to sell. Now see how all the information you're getting here, some would say, well, you know, what's this based off? It's based off of years and years of seeing the same things happen over and over again, highly consistent. Do they work 100% of the time? Absolutely not. Nothing works 100% of the time. But as your teachers, we're trying to make you consistent by sharing with you things that have stood the test of time in terms of consistency. So as you see here, once again, this generic chart, we are below the 50. We have a bar here that closes in the bottom 25%. And you see how the market, not me, not some earnings report, but the market was telling you it wanted to go lower. You see, I had trouble when I first started trading some 42 years ago because I did the same thing probably the majority of you have done. I looked at all the earnings. I was waiting with bated breath for all the economic reports to come out. We didn't have Twitter or the internet in the 70s, but we did have a lot of newsletters, and I signed up for virtually every one of them to wait and find out what this guru thought the market should do. And guess what? Nothing worked. Sure, I'd have a winner every once in a while, but over time, I had nothing to show for it because my losses just outweighed my winners. And I thought, how come this stuff isn't working? I thought I was always taught this traditional wisdom was supposed to work. I was lucky enough to have some mentors who saw how much I was struggling, and they said, Steve, there is absolutely no consistency in those things. Sure, you can use them if you want, but why not just focus on the chart in front of you? Because it pretty much tells you just about everything you need to know. And you don't have to waste your time or overcomplicate your trading trying to decipher what these other things mean. Support and resistance, figuring out what the institutions want to do, looking at the volume indicators, economic reports. I mean, they said that's just silly. There is no consistency in those things. Just focus on what the market is telling you. And I said, well, what is the market telling me? I've never listened to the market. And that's where they began to teach me these same things that I'm teaching you today. All right, so let's look at some recent strategy number 4 examples based on these 2 rules. And remember, we're not going to talk about exiting. We're not going to talk about stop placement because those are also involved in the rules. And we're not going to talk about that specific pattern because I know a lot of you will say, well, Steve, I've seen a bar here that closed in the top 25%. Why isn't this a buy signal or a sell signal? Because remember, we're not going over the specific pattern that makes up strategy number 4. I can't give away that. I'm sure that wouldn't be fair to the students around the world who purchased strategy number 4, and they wouldn't like it too much if they saw me giving away the entire rules to the strategy for free on a Saturday webinar. But I shared 2 of the rules with you, so I gave you a good appetizer here. And remember, everything is done automatically on our platform. Even though we teach you and we want you to know why you're buying and why you're selling and what makes up a valid setup, it automatically generates these setups for you on our platform as a way to check your work. Let me share with you the process you'd go through with strategy number 4. Okay, here's this chart in QCOM in April. Once again, someone looking at this would say, Steve, how can you have any idea, what this stock is doing? It's basically going sideways. There's absolutely no indication. It's a range market. I've always been taught in this webinar I go to in this chat room to stay away from range markets, okay? And also, the institutions aren't buying this. And I think there's a lot of institutional selling right here based on that $10,000 class I took that follows the institutions. So I'm not going to touch this thing. Once again, this is the way I used to base my trading 42 years ago. This is nothing new. I did the same things 42 years ago, and it didn't work then, so it's not about to start working now. What works? What works with consistency is when you listen to the market. So what is the market telling us? Well, the first thing on our platform is you click on our buy-sell line. That tells you whether you should be buying or selling. In other words, whether you should have a buyer's bias or a seller's bias. The drop-down menu appears. We just click on the 50-period moving average. And where is price now in relation? Even though the market's been going sideways, where is it? It's above. So what is the market? Not me, not some economic report, but what is the market telling you? It's telling you the overall trend is up. So if the market is saying that it wants to go higher, do you want to sell, or do you want to rely on some non-consistent report telling you that the institutions are selling at a certain level? No, you're just going to listen to the market, and the market's telling you it wants to go higher. Now we look for this pattern as well as a bar that closes in the top 25%, and we see, well, we think we have a couple of buy setups. In order to check our work, we click strategy number 4, we click on signal arrow, and let's see if we properly defined a setup. And we were right. We had one right here, which we thought was a setup, and we had another one. Okay? And this is where QCon gained 25 points in 3 days after the second setup. Nothing was based off earnings. Nothing was based off volume. Nothing was based off an economic report. Nothing was based off some support and resistance. Once again, you can do that if you want, but why clutter your trading? This is just so simple. You see, you could have come up with answers in less than a couple of minutes. Here's another example here, an EA. All right. Once again, someone say, how can I decide what I want to do here based off, 4 or 5 bars? Well, the first thing you do is click on the buy-sell line, because the market will tell you what it wants to do, and you just piggyback on board. Click 50-period moving average, and even though we had 1, 2, 3, 4 bars close above, this bar closes below. Now, that's not enough to tell us that the market wants to go, conclusively much, much lower. But at the same time, we look at the bars here, and actually this matches a sell setup. So we check our work, click on signal arrow, and guess what? We're right. So that means we're learning how to properly identify these. In the future, you won't even need this feature of the up and down arrows, because you'll know exactly where a setup is. Now, this is a little bit more aggressive trade, but you could have taken it, and the stock sunk 7 points in 2 days, okay? How about this example? PRGS, once again, kind of going sideways. The majority of bars are above. We only have 2 closes below, but we close right back up. It meets the requirements of the pattern, and we are above the 50. So we could have bought and made 10 points in a couple of days, okay? It's up to you. Remember, we're not telling you exactly what you would have made, because we furnish you with a number of different sell and buy setups in terms of where to enter and where to exit and where to place your stop. So some students may have said, well, I'll take a point or two and I'll say thank you. Others may have taken the 10 points, or others may have said, well, I want to see if I can hold out for more. It's entirely up to you. As I said in the very beginning of the webinar, you are in charge of your trading. That's our goal. We're not going to tell you where to enter, where to exit. We'll give you these high probability entry points, but it's up to you how to decide. That's the only way that you will become a consistent trader, in our opinion. Once again, below the 50-period moving average, all of these setups, the bar closed in the bottom 25% of their range. Do you see how you have this higher level of consistency if you only sell if the overall trend is down? Well, sure, someone could say, but Steve, this was a really good buy setup right here. Yes, it was, but once again, let's say you bought and then sold up here, you could have made some good money, but what if you had tried it right here, all right? You would have had to get out very quickly with a small profit, or most likely turn that into a loss. Why not just put the odds in your favor by swimming with the current at your back instead of always trying to swim against it? Now, this can also be used as a trend identifier for the market. This is a diamonds, which is the ETF, which represents the Dow. This was a while ago, but 2 sell signals were generated. You see the majority of the bars were below the 50. We had 1 close above and then closes below. Both these bars met the requirement, and they closed in the bottom. 17 quick points, which equaled 1,700 points in the Dow. So you could have used this as a market tool to tell you what the actual market's going to do. And if you saw that the market was generating sell signals, then why would you want to buy, right? If the market is going to go down, you don't want to be a buyer of that stock, let's say you're looking at. Now, strategy number 4, as you've just seen, is extremely consistent. But losses, as with any method, are inevitable. Remember, this is what we mean by consistent. Consistency means there will be losses. For example, we are above the 50-period moving average, so the market at this time is telling us it wants to go higher. A buy signal was generated right here, and nothing much happened with it. Maybe if you had one of our tight stops, you were stopped out. But then another buy signal was generated right here. So you say, well, I'm going to get back in, and then this happens. Quick 15-point loss to the downside, all right? They were both valid signals following all the rules. Or right here, this is an older chart in Disney. We're below the 50-period moving average, only had one close above, and then immediately closed right down below it. A sell signal, a valid signal was generated. You say, oh, this has got to be a great signal. We're going to probably go down, make new lows, and 20 points against you right off the bat. Or what if you get whipsawed, you lose going long and lose going short? For example, here was a buy signal, closed just barely above the 50 period, but it met all the requirements, closed in the top 25%. And look what happens. You load a loss on this one. And you said, okay, but Steve says it's consistent. It'll make it back, so I'll go short on this one. So you sell this, and immediately goes against you. At this point, you're probably cursing and swearing at me and throwing your computer through the window and saying, this stuff doesn't work. This guy, Steve Primo, is just like all the rest. He's just trying to sell me stuff that doesn't work. Well, listen. Sells are inevitable, and losses, I should say, are inevitable. They will happen all the time. So what we want is a filter that can filter out, not all of them, but at least a good part of these trades that don't work out. This will increase our odds for consistency. So this brings us to technique number 2. How can we increase our odds for consistency? Well, technique number 2 is, in order to increase your odds, you need a tool that translates and confirms what the market wants to do. Okay? So in other words, when we looked at the 50-period moving average and when we apply strategy number 4 included in that, all right, it's telling us a high probability setup. We want a filter, something that translates and confirms that that setup is okay on a shorter term time frame. And this brings us to technique number 2, which is the PET-D. You've heard about me speak about it numerous times. This is probably our most powerful tool at Specialist Trading, a tool I was introduced to some 4 decades ago on the floor that really translates what the market wants to do on the short term. Okay, remember the 50-period moving average was the overall trend. But we know that sometimes within the overall trend, you can go up, go down, go counter trend. The PET-D is a great translator for the short term. Let me show you what I mean here. All right, most students would look at this and say, okay, well, I guess the market is telling me it wants to go lower, so I'll sell somewhere around here. And you think you're doing pretty well, and then this happens, okay? What could the market have translated to us in advance of these awkward moves here, either in a stock, future, currency pair? Well, once you apply the PET-D, you see that it colors the bars, either red or green. And you see how it translated right up here with a series of red bars that it wanted to go lower well in advance. And you see right here on the short term, once it had consecutive green bars, how it translated well in advance that it wanted to go higher. So you see the beauty of the PET-D is that it tells you which direction you should be trading. This is for the short term. Remember, the overall is the 50-period moving average. But once you know, you can confirm if your strategy is in sync with that direction for the short term. All right, when we combine strategy number 4 along with the PET-D, this is called our dynamic duo, because you've really elevated your odds for consistency by having a high probability setup with strategy number 4, and then by confirming it or translating on the short time if it's been confirmed to trade the market. All right, so here is the actual use of the dynamic duo. In other words, you're only going to buy if strategy number 4 signal bar is colored green. That's it. That's how simple it is to apply these 2 techniques. So when you see that bar with the arrow below it, it must be colored or outlined green. This means that it's been confirmed by the PET-D. We don't care what the previous bars were. It makes no difference. But that bar that is above the arrow must be colored or outlined green. So as we see here, these were the 2 buy signals in QCOM that worked out fine. Once we added the pet D, we see that they were outlined green. And so that's one of the reasons why they may have worked out, because they were confirmed by the short-term trend. So you had the short-term with the overall trend, which is the 50-period moving average. All right, let's look at this setup here. Remember, we had two buy signals that were both losses. And you're saying to yourself, well, what happened? I was above the 50. They both closed in the top 25%, and they met all the rules. Why did I lose? Well, let's add the pet D. They should have been colored or outlined green. Both of these were colored or outlined red. So that means the pet D was telling us on the short term right here that the trend is actually going lower, even if we were above the overall trend. So this was giving us a great clue not to take these. You would never have taken them and never had a 15-point loss if you listened to the dynamic duo. Now, sell signals. The same thing, but we're only going to take a sell signal if strategy number 4 signal bar is colored red. So in other words, if you see a bar that has a red arrow above it, that bar must be colored or outlined red as well. All right, remember we had that 20-point loss in Disney, and you're saying to yourself, well, you know, it met all the rules. The majority of the bars are below the 50. We only had one bar above, and then we closed below. But if you had applied the pet D, we needed this bar to be colored red, the way these bars were. And look at the pet D already started shifting to green well before it was above the 50-period moving average. This is why we say it's a more shorter or more sensitive way to translate what the market wants to do. So you would not have taken this and not have lost potentially 20 points. You see how this filter can really filter out not all of the trades, but a good number of these bad setups. All right, so let's look at some more dynamic duo examples. And remember, these three techniques are strategy number 4, the pet D, and then applying them with ease and simplicity on the PTS Primo charting platform. All the displays you see here have been generated on our platform. All right, here's an example in MAN, actually 2 examples. We have a couple of closes, 3 closes below, but then we originally close above, and then we have another buy signal here. All right, are these valid setups to take? Well, the first thing you want to do is click on pet D, and the colors automatically change. So you would have seen that these were both valid setups, giving you the confirmation to take either one of those trades, and the stock goes up 15 points. Now, we don't know how high something is going to go. In fact, no one knows. I don't care what anybody tells you. No one has any idea how high something will go or how low something will go. We provide you with different exit levels, upwards of 6 or 7 different exit levels, and stop placement, and even different entry points. Remember, you're going to decide how you want to implement it. The beauty is, on our platform, we make it simple. Most of these things are a click away, and you can decide which one you want to take. How about these 2 sell signals in WFC, okay? WDFC. Well, we're below the 50. These bars are both closing in the bottom 25%, so they meet all the requirements of strategy number 4. Let's confirm it with our translator. We click on the pet D, and they need to be colored red. If they're colored green, we're not going to take them. But yes, they were colored red. In fact, all of these bars were colored red. So it gives you the confidence to go short. You can buy the puts. You can sell short the stock. It's actually up to you. Or if you were long this stock, this would be a very good time to get out, because you have 2 confirmations that it's most likely going lower. And as you can see, the stock dropped 16 points coming into April a couple of months ago. How about APC? All right. Now, the majority of the bars are below. We have 2 sell signals, and obviously these probably would not have worked. Sure, you could have taken a very quick profit here, but most likely you wouldn't have, and you would have gotten stopped out. And at this point, you're saying, well, God, Steve, I can't take this buy signal. This is too scary. I've already had 2 losses here. Well, not necessarily, because if you had the dynamic duo, you would have applied the translator, the pet D. Just click it on. This is how simple everything is on our platform. It's one-click access. And you would have never taken these sell signals. Why? Because the sell signals need to be colored red. They're colored green. So there's no trade to be taken there, no 2 trades. And then a buy signal was confirmed. So you would have bypassed these, taken this, 20 points to the upside. Did we have any idea it was going to gap open like that a week later? No, we had no idea. And someone would say, well, then why would you buy this? You're not looking at the earnings. You didn't know anything about the news. Because once again, this is the same way my mentors taught me. The markets usually tell you what they want to do in advance. So, you know, there's no reason to spend your hard-earned time, and most especially your money, on all these things that have no consistency, like following the institutions, like using all these tons of indicators to cross over and tell you what's going to happen. The market just with a few simple techniques, tells you what it wants to do. Then your job is simply to jump on board. How about WBA? All right, we have two valid sell signals using strategy number 4, but are they confirmed? Well, let's confirm it with the PET-D, and yes, they're both colored red. So this is giving you the confidence to buy puts, to go short, whatever you want to do, or exit the stock. The stock quickly fell 18 points coming into April of this past couple of months. And if you missed that, don't worry. There's always lots more sales signals along the way. So do you see how we say, sure, every once in a while the market is really sold off, you say, well, Steve, gosh, this chat room I go to, when we got down here in March coming into April, the indicators were so oversold. I mean, we were at this major Fibonacci support, and it had a morning star, candlestick pattern, and the institutions were all buying it. The volume picked up. I'm not going to tell you that there won't be some nice bounces below the 50, but remember, you have greater odds for consistency if you look at those bounces as selling opportunities. Sure, you could have bought here and had to be quick and get out another week later, but had you simply taken the sell signal, look how much more you could have potentially made. So there's more consistency in being in sync with the overall and short-term trend than there is in trying to buck it. Take it from someone who was there 42 years ago. It didn't work for me 42 years ago, so it's not about to change now and work. All right, example in PRGFs. All right, for most of the bars we are above, then we have 2 closes below, so that's close to telling us the overall trend has changed, but we quickly close back above. The bar closes in the top 25%, and according to the pattern recognition rules, it met all the requirements. So this is a little aggressive, strategy number 4, buy signal. So maybe you say to yourself, well, it is a valid signal, but I'm not sure if I want to take it, so let me confirm it. You click on the PET-D, and guess what? All we need is for that bar above the arrow to be colored or outlined green, and it was. So this will give you the confidence, should you decide to take this trade. And gapped up 11 points 3 days later. Once again, did we have any idea it was going to gap up like that? Absolutely not. But the market told us it wanted to go higher. So that's all the information we needed. All right, here's what we mean by consistency. All right, consistency, once again, does not mean, well, wow, I'm going to have a lot of winning trades. That's not what consistency means. Consistency means you are aware that you will have losses. There's nothing wrong with that. You just want to have a method that's consistent enough to recoup those losses and then get you going forward again. That's what consistency means. It has nothing to do with how much money you're going to make or how valid the system or strategy is. It just means that you are aware that losses will happen, but you feel confident. You feel secure in your method knowing that it will be able to recoup those losses and get you going back on the profitable track again. For example, we had a buy signal here generated in UTHR, okay, followed by a sell signal. Now, obviously, the buy signal really didn't work. If you got out 1 day later, sure, you would have done all right, but most likely, you would have lost money a day later. You would have been stopped out. If we confirm these signals with the PET-D, we see that the buy signal was confirmed. It was outlined green. So that's a roughly 4-point loss if we use one of our most conservative methods for stop placement. Okay. And once again, as traders, we love to play the victim game. Once we have a loss, we love to sulk and go in the corner and lick our wounds and say, why does this always happen to me? But remember, if you have a plan that's consistent, you have to get back up and get back on the bicycle again, because if you miss the next setup, maybe it will be able to recoup the loss. For example, 2 days later, you had a sell signal. All you have to do is stop and reverse, 16 quick points. So you could have had the opportunity not only to make back what you lost, but also make a little more. That's what we mean by consistent. All right, Facebook. This is an older chart in Facebook coming in the beginning of the year. 2 signals were generated. Which one do we take? Well, we add the PET-D and we see that we want to take both because they're both outlined green. So you could have bought calls or some type of spread with a buyer's bias because the stock gapped up actually 27 points. Okay, so potentially you could have captured that. Once again, you can also use this as a way to identify what the overall market is going to do. For example, a sell signal was generated in the spiders. This doesn't necessarily mean that you have to trade the spiders, but if you feel confident that the spiders are going to go lower, isn't that also telling you that the market it represents, which is the S&P 500, is going to go lower? So wouldn't you want to stay out of the markets altogether? For example, a valid sell signal, strategy 4 sell signal was generated. This was in December, and it was colored red. Now, we all know what happened in December. The markets went down tremendously. Most of the traders that are not my students were saying, gosh, Steve, this market killed me. I had no idea we were going to go down. All that tariff news and economic reports, and there's a lot of fear in the markets. Geez, it just hit me by surprise. Once again, that's because you are depending on someone or something else to tell you how to trade. We don't necessarily depend on that. All we depend on is having the market tell us what it wants to do. And in December, the spiders, the ETF that represents the S&P 500, was telling us it wanted to go lower. So why would I listen to what some institution or what some guy on TV is telling me? Why not just listen to the market, the chart in front of me, because that's the source of what I'm trading. So it went down a quick 27 points at the end of last year. Now this transferred on to 3,200 Dow Jones Industrial points in 3 weeks. So do you see, this is what we mean by why we want to give you education. Once you educate yourself, you don't have to rely on inconsistent methods. You can rely on what the market's telling you, and you can make your own decision. Once again, I know I sound like a broken record, but this, in my opinion, is the only way one becomes a consistent trader, by making your own trading decisions. All right, obviously a trade here in Apple, someone could see a sideways range. There's no way I can make a trade out of this. This is just going basically sideways. In fact, this breakout here wasn't confirmed, so I think this is really going to go lower. All right, the chat room I go to really wants to short Apple here. Well, what's the market telling us? Click on the buy-sell line. Here's the process you do on our platform. The market's telling us the overall trend is up. So why would you concern yourself with institutions or support and resistance or overbought or oversold? I mean, it's silly, okay? All right, now we look for the pattern, the bar that closes in the top 25% along with the other rules, and we actually see we have a buy signal. We want to confirm it, so on our platform we check our work, and yes, it's a valid buy signal. We were right. But now we want to go one step further and just confirm it with the PET-D. We want the translator of the short-term market, the PET-D, to tell us if this is a valid signal to take. So we click on PET-D, and guess what? It's not. It wasn't confirmed. It's outlined red. So we don't want to really take that trade. If we're trying to be a consistent trader, we're not going to take it. Remember, trading is all about being, vigilant. It's about, continuing to be in the process, not to just go and sulk in the corner, but to stay on, on board and to really be focused, because opportunities are all around you. Now, the very next bar generated another buy signal, and guess what? It was outlined green. So the PET-D now was telling us it's okay to take this trade. This one has been confirmed. Sorry, this one wasn't, but this one is okay. Now, someone at this point would say, I can't buy this. It's 10 points higher. I wanted to buy the other one, but it wasn't confirmed. Now you're asking me to buy this 10 points higher? I can't do that. But, I know how you feel. I had a very difficult time with that concept when I first started trading too. It's like, how can I buy something higher? But had you done that, it would have been a very wise decision, because Apple actually continued to go higher. In fact, it gained 25 more points, even purchasing at this point. So this is what consistency means. We're just trying to get you on board with the market and make you a consistent trader, a 2-step forward, 1-step back trader. Okay, so before we go to questions and answers, let's recap. Remember, apply the buy-sell line. That tells you the overall trend. And then look for the top-bottom 25% where the bars are closing. That tells you where the market wants to go, if it wants to go higher or lower. That's your confirmation that that's a buy setup. And then apply strategy number 4, the other rules that make up that very consistent method. To confirm it, you confirm it with our translator for the short term. That's the PET-D. And all of this process is made simple and easy on our platform, the PTS Primo charting platform. When I first used this 4 decades ago, I had to do this by sight, and I had to make sure I was always in sync, and I had to check my work. And a lot of times I missed trades trying to confirm things. But now with our platform, we made it so simple, you'll know in a matter of seconds whether a strategy signal has been generated, if it's confirmed, and it's all one click away on our platform. So ask yourself, do you think these 3 edges that I taught you today could have helped your trading this past year? We have a great attendee discount for all the people taking time out of their Saturday to join us this morning. We're going to offer you the first two of these techniques. That's stock strategy number 4. Now, once again, I think that's properly, or I should say improperly titled, because when I first started trading this, it was a stock strategy because I began strategy number 4 on the floor of the Pacific Stock Exchange. But now that we have students in over 115 countries and in all the states in the United States, everyone trades a different market, and they trade it in different time frames, different markets, futures, currency pairs, Bitcoin, commodities. We've seen that strategy number 4 can actually be applied to any market. So don't get confused there by the title. It should just be strategy number 4 because it works in any market and any time frame. So you're going to get instant course access, detailed instruction. You'll learn all the different variables for entries, exits, and stops. You'll get the automatic buy and sell arrows. Along with it, you'll get the Pet D. All right, that's the translator. You're also going to get 4 Pet D trading techniques, which are based off the Pet D. This includes both add-ons, so you can add them onto your platform to get the up and down signals as well as the color bar differentiations, and also with educational correspondence. So this is our dynamic duo special. But remember, the title of this presentation is 3 techniques to really kick your trading into overdrive here. So the third one is our platform. We're going to offer you 12 months of the PTS charting platform. So to make it simple for you, everything will be one click away. Now 12 months runs roughly about $1,900. We're not going to charge you $1,900. In fact, we're not going to charge you anything. It's entirely free. The third technique is entirely free. Now, this just doesn't mean you get access to strategy number 4 and the Pet D. There are also some other advantages to using our platform because this comes with proprietary exit levels. Those are all automatic, one click away, and you'll see different exit levels for strategy number 4. It also comes with over 90 of the most prominent technical indicators. One thing that's not displayed here is another tool which tells you the strength of trend. It's called our strength of trend tool. I devised this with Pro Trader Strategies, which is a great tool for telling you if a trend is running out of gas or not, or if there's still enough momentum left in it. This also comes with a signal scanner. So this is another one of the great advantages of using our platform, because if you can't be in front of your charts all day and trading, you can scan on a nightly basis for the next day's setups. For example, all you have to do is click on the strategy number 4 tab, and then at the very bottom, click on scan. You'll see this window appear on your platform. It's the strategy number 4 scanner page. You click on load symbols, and we provide you with a list of symbols, a symbol list from Bitcoin, futures, currency pairs, intraday trading, Toronto Stock Exchange, Indian exchanges, DAC exchange, a lot of commodities, and S&P or QQQs. And in an instant, whichever one you pick, you'll see the data appear. And then it's as easy as clicking on scan because it's already formatted to scan for strategy number 4. Now, when you see a series of green bars, that means that that's a buy signal. A series of red bars means that there's a sell signal in the corresponding stock. Now, here's an example that's something that took place just a couple of months ago. If you would have scanned the night before, you would have seen that there was a buy signal in Twitter. Okay, we are above the 50-period moving average. This is the process you would have gone through. It would have given you a green bar next to Twitter on the display page. So you would have clicked it on, and this would have appeared. You would have seen the green arrow. And over the course of your studies, you would have said, yes, this is a valid setup, but I want to confirm it with a Pet D. So now the next thing on the platform is simply to click on the Pet D. And not only is that bar green, but all the bars have been green, including the bars that were below the 50. So the short term is much more positive than the overall trend. So this could have given you the confidence to take this trade. It's only a $30 stock, but it jumped 23% in just 3 weeks, okay? So you could have bought calls, you could have actually purchased the stock. This is something you could have done with our scanner. Now you're also going to get the scanner, but included with that is Bloomberg TV. So remember, we're not here to tell you how to trade or how not to trade. We're simply here to educate you. And if you feel you must use fundamental news in order to trade, well, who are we to tell you not to use it? So we have an icon on the platform that clicks on the media page, and you'll get live Bloomberg TV. Any economic report, any earnings report, anything you're interested in fundamentally that's happening at the moment, you will see in here live on your screen next to your chart. And lastly, this comes with personalized tech support. We can resolve any issue in a matter of moments that you may come up with. So this is a great offer. You're going to get a full year of this entirely free. This is our dynamic duo combo plus 12 months PTS Primo charts. These are the 3 techniques that will help elevate your trading, okay? All right, so let's break this down. Now, we're going to give you a great offer. We realize that not everyone can come up with the close to $6,000 that this is normally priced at, because if you purchased all these three separately, it would roughly cost you close to $6,000. We're only going to charge you a one-time fee of $497 plus $97 per month. That's it. I mean, $497 plus $97 a month, that's an amazing, amazing offer. Remember, you are getting the platform, which usually runs $1,900 for free. Now, let's say you don't want, you're okay, you have enough money and you're free to just purchase the whole thing. Well, we'll only charge you for the Pet D. The Pet D usually runs $29.95. So for a one-time payment of $29.95, you can get everything, okay? So there's two ways to do it. Now, remember, either way you decide includes 1 year free of the PTS Primo charting platform. So this is a fantastic offer. I mean, this is normally priced at roughly $6,000. For less than $500 and only $97 a month, you'll get all of this. Everything I just shared with you today is yours. And one thing I didn't talk about is included with this comes educational correspondence. This means you'll get my personal email if anytime you have a question about trading, about how to actually take a signal or something that maybe doesn't make sense in terms of the rules, you can always email me and I will be answering it as soon as possible. So this is always included. You're a student of mine, and I'll be there with you every step of the way. Okay, so here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. They help me devise the platform, and plus they're in charge of all the course pricing as well as discounts as well as tech support. I would suggest contacting them by calling them directly at area code 310-598-6677. They have trading consultants manning the phones right now, and there's absolutely no obligation. They would be more than happy to answer any question concerning pricing or tech support, and they're there to help you. And once again, there's absolutely no obligation. Now, that link you see at the very bottom is the link that will take you to the sign-up page, also the information page. It's not a live link, but the live link has been posted on our chat box on the far right. Okay. Now, remember, I said at the end, I'll reserve this last 10, 15 minutes for any questions. So if you have any questions, please feel free to type them in right now. And I promise I will answer them right now. Remember, I said I would answer the questions at the very end. I told you there were a lot of slides, so that's why I kind of talked a little fast today, because I don't want to take all your time. But I will leave this information up here while you type any questions. I see we have one here. Steve, do you mentor still trading till today? Yes, I do. We do private mentorings, which that's an entirely different course. I do one-on-one mentoring over Skype and over the internet, but that's entirely different. That's just a one-on-one type of thing. So if you're interested in that, I would contact Pro Trader Strategies. It's a little bit more expensive than $497. Because you're spending a lot of time with me, but don't worry. I'm not trying to dissuade you, but if you're new to my presentations, we don't normally like to charge something expensive right off the bat. And our courses, you still have my email, so you can always, in terms of asking me questions, always contact me that way. Okay. Let's see, Tuan is saying, I own the dynamic duo. It works nice for me. That's great. Okay, that's great. And once again, I'm happy for your success. But please remember, this is not a system. Okay, the difference between what we teach and systems is this. A system requires that everyone take the same signal, always trade it, regardless of the market environment, regardless of your capital, how much you have, but you must take the signal. You must enter the same place, exit the same place, place your stop, because that's how you come up with the system requirements, which are based off data, which are based off statistics. Where we differ from that is that our strategies are 70% rule-based, but we allot for about 30% discretion. Now, discretion doesn't mean that, oh, I feel lucky today, so I'm going to bet the farm. That's not what discretion means. Discretion is an insight that comes from experience, that comes from paper trading, where you see that the environment possibly has changed. Maybe there's more volatility. Maybe there's less volatility. So because of these environment changes, maybe you're going to enter at a different place. Maybe you'll exit at a different place. If there's less volatility, maybe you'll take a quick exit, a quick profit. If there's more volatility, maybe you'll try to go bet the farm and try to see how high you can get. And, so this is the discretion we want. So because we encourage every trader to be a part of the process, there's no way we can have any statistics such as win-loss ratios, such as percentage of wins, because that would mean everyone has to trade the same way every time. have to trade the same market, the same time frame, the same direction. We don't believe in that. As I stated in the very opening statements, our philosophy is that the only way to become consistent is to make your own trading decisions. And if everyone is making their own trading decisions based off the insight, there are just 1,000,001 ways to trade this. So this is what we promote. This is why we're different, okay? Let's see. I'm a scalper. I trade the micro E-minis, but but you're doing well trading the dynamic duo. That's great, okay? Michael asks, you just showed stocks. Does this work with futures? Yes, Michael. I'm sorry. You know, the presentation I had mainly focused on stocks, but can I tell you a secret? I mainly trade futures, and I use this on futures. Okay, so I'm not trying to dissuade anyone and say, well, if Steve trades futures, then I guess I must. No, trade any market you want, any time frame. But I'm just trying to point out the fact that this can be applied. We have people that use this on currency pairs. We have people that use it on Bitcoin. And so it makes no difference. In fact, we have really seen some nice examples from students in commodities, soybeans and cattle. So wherever there's a trend, wherever there's this pattern, you can get some really nice setups. That's the beauty of this. So another beauty of this, if you like to trade multiple markets, we have students that like to trade currency pairs and futures. Well, it's not like you have to buy a different strategy for each market. The same strategy can be applied to both those. You don't change anything, okay? People are asking me, question, the people that taught you 40 years ago, do they still trade? Well, I don't know. I've kind of lost contact with them, so I don't know. But I would assume, 42 years ago, they were quite older then, so I don't know if they're even still around, so I don't know. I've lost contact with them. I don't think they live in the city where I live in anymore. But all that matters, remember, is to focus mainly on what you want to do. If you want to trade futures, this will work on that futures. If you want to trade intraday, that will work intraday. That's what I do. If you want to trade commodities, this will work. Now, am I telling you that you will be able to retire in 6 months? No. Once again, you will receive the results based on how you trade. We don't sit there and tell you exactly where to enter or where to exit. That goes entirely against our philosophy. So if you've tried that, if you followed some guy's signals or some signal service in a chat room or some program you purchased, ask yourself, how's it working for you? How's it working for you trusting someone else's signals, trusting where someone else tells you where to buy or where to sell? If it's not, you're really seeing exactly what I learned 42 years ago, that you have to be a part of the process and you have to make your own trading decisions. So once again, in closing here, there's absolutely no obligation. If you have any questions about pricing or about maybe you're a student that already purchased one of our platforms or programs and you're interested in being involved in this, don't worry. They would be more than happy. Pro Trader Strategy would be more than happy to work out some type of a deal with you or some type of discount because you're a qualified student and already a member of ours, okay? So once again, give them a call, okay? We've just about come out to the end of our time, but contact Pro Trader Strategies, give them a call, and they will be happy to answer any question you may have if you have any more questions. In conclusion, I just want to say thank you so much for attending. Thanks for taking time out of your Saturday. I wish you the best of luck, but most importantly, I look forward to all of you becoming students of mine in the Dynamic Duo course along with our PTS Primo charting platform. Thank you so much for attending today. I'll see you next time. Bye-bye.